Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Wednesday the 3rd of May 2017, and the trade we're going to look at today is a bit of a funny one. It's a bit of a mixture, a bit of a mongrel trade. We've got what's known in technical analysis as a bit of a pennant pattern, and we have bullish breakout, which is what they would expect. So traders trading this obviously go long because at the hard right edge, so imagine all this to the right hadn't occurred yet, that would have looked very enticing. Discounting any of this hasn't happened yet, right? So at the hard right edge, it's a bit of a level as well off to the left, so break, pull back, traders love a bit of that, going long, and then as I say, traders would go long on the break of this bullish pennant to the upside. And no sooner has that happened, obviously, you know, this historical analysis is what's made them, you know, be interested in the trade in the first place, but then it's the actual price action that convinces them that the historical analysis is correct, and ultimately that is what gets them into taking the trade. So they take the trade, they go long, but they didn't consider this big old space to the side of the chart, and that's what traps them. So it's like I refer to the markets as like one big giant trapping mechanism. It all works beautifully, it all melds together perfectly. You know, the trader first of all notices the patterns, these historical technical patterns, the very common technical patterns. So they notice them, and that gets their eyeballs on it, and then they start doing that historical analysis. So they start looking at the charts, start drawing lines, adding levels and things like that. And then ultimately what gets them to pull the trigger is the price action at the here and now at the hard right edge. As price starts to confirm their assumptions, that's what makes you take some risk. If you just, you know, deconstruct that behavior whenever you've taken a trade yourself, you know that to be true. It's the price action that makes you pull the trigger after you've done that historical analysis. And then it's my assertion that the traders don't pay any attention to the fact that this hard right edge, right, hard right edge is going to fill. It's going to fill with price, but most people don't consider it. It just requires some time to elapse. What happens is traders just get super focused on the here and now, and they don't consider what's coming into the future. So as I said, all of that to put together is a trapping mechanism. You don't see it coming. And that's what ultimately gets you, you know, the trader in trouble. You know, where traders place stops then become very obvious. Where traders are losing becomes very obvious if you don't participate in those moves yourself, right? If you didn't take the breakout of that pennant, you know, when price is now down in here, you know something about, you know, these traders that they can't possibly know about you, because you never came into the market here. You witnessed those traders, you observed them in here, right in there, but you didn't take the trade. Now when price develops and drops like this, they're in trouble if they're still in the trade. If they're not, they've lost. So we know that about a certain portion of them. If they're still in it, they're losing, they're underwater. Well, at that point then those traders have a weak hand, and that's where we want to try and take advantage of those situations. So that's what we do in the inner circle, a brand new inner circle, where I teach traders how to look at the markets in this way. We didn't make the move here. We did something which is ultimately kind of pathetically simple, but we wait, right? And we gain a huge amount of knowledge that those traders can't know about us. We understand the losing, not have lost. There's a psychological edge. We know how that feels to be losing and be getting squeezed by price, etc., etc. So we gain, and they don't from that scenario. So getting back to the setup, traders are sort of trapped in here, and if anybody obviously went long in here, they are also in a bit of trouble. So if price pulls back into the underside of this level, those traders will bail out of those positions at break even, so that's going to create some supply. Now there is some weakness around sterling. There was yesterday morning, but there was some decent data in the morning which turned the price, but this morning again there's softness in sterling because of the hard stance that the EU is taking on our Brexit negotiations. They have reportedly doubled our exit bill from 50 billion, which was considered a joke anyway, to 100 billion. So you can imagine how that's gone down this morning. And also Theresa May, the Prime Minister May, has been banned from some type of negotiation as well with other member states. So net sterling's weak this morning. So if we get a chance to get in this to the downside, this looks like a pretty good trade. And if you'd like to come, as I say, and learn how we look at the markets in this way, how we use common technical patterns to reverse engineer those strategies, and then watch and wait to see where these traders then ultimately take these trades and find themselves in trouble, so that we've got this evergreen edge that allows us to take trades when our opponents are weak. Then click the link below, come and join me in my brand new inner circle. I'd love to have you there. Take care and have a great day.